Wednesday, November 1st, 0907 a.m. New York time. Good morning. Hope we just finished the month, and today's the first day of the new month. I like to do a review on the stock indexes, the stock sectors, Magnificent Seven, looking at the monthly timeframes to see what we've done. Again, this is a very broad market we're going to look at, so you're going to see a bigger perspective of what's happening year to date in the past few years. Each candle represents the current month. So again, we just finished last month. That's what you're going to see. Stock index, the big go-to stock index, the S&P 500. That's the 500 U.S. publicly traded companies, the largest publicly traded companies. Broad index that most financial institutions and individual investors try to compare their financial year-to-date performance to, regardless of their mutual fund or single stocks. So looking here at a 5-year chart, each candle's 1 month. S&P 500 for the month, closed red. Lower high, lower low. The current trend is down. We're inside the range of the year. Yellow horizontal line, here's the high of the year. Yellow horizontal line down, here's the low of the year. We have not taken out the low of this year. We're still inside the range. We're still inside the range of last year. Here's the high of last year. And this is the low of last year. Yeah, we're not performing. Again, I say again, we are not performing worse than last year since we have not taken that out. Just a huge consolidation here, building energy for the next breakout. As you can see out here, the trend line, we're going to see if things change. If we get a shift, a trend reversal this month. Let me change that to the dotted. There we go. NASDAQ 100. NASDAQ 100, part of the S&P 500. Look at that. Red for the month, lower low, lower high. Broke below this consolidation. Dow Jones Industrial Average, same thing. Lower low, lower high. I have another video I just posted on that. All Dow 30 stocks. Highly recommend you look at that because you can see the stocks one by one, how they're performing. Dow Transports, red for the month, lower low, lower high. Still inside the range of the year. Dow Utilities, lower high, lower low. Made a new low for the year. Green for the month. Again, that's the Dow Utilities. Dow Utilities index that pays high dividends, defensive stocks. People buy this when they think there's not going to be growth in the economy. So again, this being new lows for the year, people don't want to own stocks, indexes, companies and divisions don't want to own stocks paying dividends. They're focusing on growth stocks. Again, going back here, the NASDAQ 100, much closer to the high. Growth stocks, the ones that are going to go higher and make more money. And the Russell 2000, red for the month. Yeah, made a new low for the high. Made a new low for the year. Lower high, lower low. Look at that. Also, took out the low of last year. See this yellow horizontal line? Yeah, that was a low of last year. Let's remove that. And move it down to the new low, 1633. Some change. See that in a minute. Russell 2000. Very small companies compared to the S&P 500 in value, in size, diversification. 67 cents. The Russell 2000 is much more affected by higher interest rates. Yeah, big effect on them. Again, interest rates have been going higher, so they're more affected. Again, new low for the year and took out the low of last year. Huge consolidation here, but broke below that. And yeah, a little buyer stepped in there. So there you go. The stock indexes, as expected, the top 3 are the better leaders. S&P 500, NASDAQ 100, and the Dow Jones. Let's go look at the sectors now. There are 11 sectors in the S&P 500. I'm going to go over them in order, the largest. Again, very diversified, 11 sectors. So you can either outright buy the S&P 500 or you can focus on individual sectors the best. Same thing, 5-year chart, each candle's a month. First is XLK, very similar to the NASDAQ 100 if you compare the indexes. White candle simply means to open and close the same price for the month. Very interesting. did make a lower high, lower low from the prior month. And look at that. Almost like a doji, the bottom of the downtrend. Often that means one or two things. It means see a potential reversal or halfway point down. I definitely focus on that, see what happens for the month after that. Potential trading signal. These are stock ETFs. You could trade them instead of the individual companies inside them. Next here is XLV, healthcare. Red for the month, lower low, lower high. New low for the year. That broke below this consolidation. 122.59. That was a low, 122.59. There we go. Again, we're still inside the range of last year. Here's the high of last year. Here's the low of last year. Still inside that range. XLF, the financials. Red for the month, lower low, lower high. Still inside the range of this year, as well as still inside the range of last year. Oops, let's remove one of those. XLY, red for the month, lower low, lower high, broke below this consolidation. Again, this was a consolidation breakout to the upside. Staircase pattern higher, high, but broke below it. The buyer stepped in at the 150 range. XLC, red for the month. Did make a higher high and a lower low. Huge consolidation phase. Again, here's the low for the year. Trend up, consolidation. So one would expect, because this had a trend up, consolidation, building energy, you might break out and go higher. XLI, red for the month, lower low, lower high, still above the low of the year. Again, here's the low of last year. We're still above that. Huge consolidations going on here. Almost a 100% retracement, almost a 100% retracement of the year. XLP, red for the month, lower low, lower high, made a new low for the year. Also broke below midpoint of this candle all the way back here, 2021. 2021, that midpoint we tested last year. Look what happened when we tested last year. We reversed, went higher. So now what happened here? This is a hammer, small body on top, long wick on the bottom. Potential reversal. We'll see if we have a breakout to the upside. So I'm not going to remove this midpoint yet because, again, it hasn't reversed off, so we may have a consolidation. Potential trading signal if we break above it. So big wick on the bottom. Some buyers stepped in here and wanted it. Let's put it in a daily. Yeah, look at that one day. Huge bullish pin bar. That's a bullish pin bar. On that one day, buyer stepped in there, bought it. Now it's a huge consolidation phase looking at the daily. We're back on a monthly. XLE, red for the month, lower low, lower high. Huge consolidation here. Very tight consolidation. XLU, new low for the year. Okay, green candle, big wick, bullish pin bar. We'll see a reverse. XLRE, took out the low of last year right here. Took it out, broke below it. So don't need that anymore. And made a new low for the year. 31.99. Let's move that down. 31.99. This sector, XORE, that's real estate sector. Yeah, are you surprised it made a new low? Higher interest rates. Took out the low of last year. Again, this was last year. Huge volatility. Look at that huge trading range on these candles. This year, majority of it was consolidation and breakdown. But again, smaller trading range. So hard panic last year. This year, much more calmer. And look at that candle. Yeah. XLB, X-ray Lima Bravo, red for the month, lower low, lower high, made a new low for the year, broke below that consolidation. Still inside the range of last year. Here's the high last year. Here's the low last year. Tight consolidation. That's it. That's the 7. That's the 11 sectors. So let's finish this off by looking at individual stocks. Magnificent 7. And this day that I'm broadcasting from you, in the afternoon, 2 p.m. or 2:30, the Federal Reserve, aka the U.S. Central Bank, will vote and announce if they're going to leave interest rates unchanged. And tomorrow has earnings for Apple. So a lot going on today and tomorrow. But again, if you're not subscribed to my Patreon page, you won't see this video real time. My Patreon members see it the same day. Apple, 5-year chart, each candle's a month. Red, lower low, lower high. Amazon, green for the month, but lower low, lower high. Huge wicks, buyer stepped in there. Nice. Google actually made a new high for the year last month. Nice. And Meta. Meta owns what? Facebook, Instagram, WhatsApp, many things. So it also made a new high for the year. And huge consolidation. Microsoft, green for the month. Higher high, higher low. It's already doing a trend reversal. We're going to see if it continues to retest that high of this year. NVIDIA, red for the month, lower low, lower high. Tight consolidation here. Tesla, red for the month, lower high, lower low, broke below this consolidation. Still inside the range for the year. Here's the low for the year. Here's the high for the year. As well. Look at this. Big wide candles last year. Trending down. This year, consolidation. Much more commerce stock. Grinding up. Snow, red for the month, lower low, lower high. Trending down. But overall, look at this big tight consolidation versus again last year. Trend consolidation. And Netflix. Who still subscribes to that versus Disney or any of the other ones? Well, Netflix, green for the month, but made a lower low, lower high. Big wick, buyer stepped in there, right there. Midpoint there, nice. So somebody apparently is interested in it still. Yeah, it's still making money. Product, services. Certainly see here a staircase pattern, lower low. Yep, has not reversed yet. It hasn't reversed yet because it has not made a higher high, higher low. Got it? That would be the reversal. It hasn't occurred yet. But we'll see if that's going to change here. Very interesting on this. So there you go. Just on a Magnificent 7. You see many of these are outperforming the sectors and indexes I showed you. These, again, are growth stocks, technology. Versus people buying the fixed income products. Yep, the growth is where the investors are still going. That's it for this video. Thanks for watching.